Hey, Bankless Nation, welcome to another State of the Nation episode. This is the episode where we update you on something relevant going on in crypto. We do a deep dive today. We're super excited to talk about the 2022 theses brought to you by Messari. We've got Ryan Selkis on. David, I love this time of year because it's a time of reflection, right? You finally get to take a deep breath and look at the past 12 months, all of the craziness that happened. We always joke when we say 1 year is like 10 in 1 year in crypto is like 10 in the regular world. And so late December in particular is a time to kind of reflect. And that's what we're doing with Ryan Selkis. He wrote this fantastic theses. He's written this every year since I've been in crypto. I've read these front to back every single year. This year is no exception. And we're going to dive into it with him. David, what are some of your thoughts coming into this conversation?
And it's a ceremonious time at this point. The consistency and robustness of Ryan Selkis' theses is just always something that the industry collectively points its attention towards at the end of the year. And it's a nice way to end the year. So I definitely appreciate Ryan taking so much time out of his just daily life. I think he said something like 10% of his yearly labor goes into writing these theses. And it's just a nice way to recap the year, especially when crypto moves so fast. Like some of these things that are in the theses for 2022, you'll forget that the context started in this year, right? So many things happen in crypto. It's just a nice way to wrap up the year and kind of understand it holistically to really get that context before we move into what is probably going to be another crazy year in crypto in 2022.
So absolutely. So we're going to dive into that with Ryan. We're going to recap the year, extrapolate on what's coming next year, and have a conversation about how this all plays out. David, we've got some predictions of our own coming to Bankless. That is going to be published in the Bankless newsletter next week. So stay tuned. It's definitely not as robust as Ryan Selkis' theses, but we've got some ideas, some predictions, and kind of a recap that we're doing. So check that out on the Bankless newsletter. That's newsletter.banklesshq.com to subscribe. Also, David, got to talk about MetaMask. We had Ledger on the podcast this morning, actually on our YouTube show. We're talking a lot about this MetaMask plus Ledger partnership. And I know MetaMask wanted us to tell the Bankless community that it is doing big things when it comes to hardware wallet support. You want to talk a little bit about that, David?
Yeah, brand new to support with MetaMask is the Lattice One, which is what I've been calling the Fort Knox of crypto wallets. It's a desktop type thing. It's a kind of, you would put it next to your Amazon Alexa or your whatever your home smart lady person is, and it just stays physically in your home, and it's super secure, super tamper resistant, and that is now supported by MetaMask along with other hardware wallets as well. There's the Keystone, which is an air-gapped QR code wallet, bunch of hardware wallet support coming to MetaMask, as well as them ironing out the issues with Chromium. So overall, the user experience is getting into new heights, thankfully, and we've all been waiting for that. So hats off to MetaMask. If you have not downloaded MetaMask, what are you doing? Go to metamask.io/download and get that installed in your browser.
Absolutely. And don't forget to use protection with your MetaMask wallet, right? It's hardware protection. You don't want to save those private keys in software. That's for sure. David, let's start with the question I ask you at the beginning of every single State of the Nation. That is this. What is the State of the Nation today, sir?
The State of the Nation today is reflecting. It was such a long year in crypto. And I think if we go and zoom all the way back to Q1, people will forget how recent some of these things that we are going to talk about actually happened. So much happened in 2021. I think it was the year that crypto people really wanted to see. Super high inflation pushed people into the concept of digital scarcity. Just poor performance by banks, pushing people to go more bankless, capture and, in my mind, corruption of Web 2 platforms, pushing people into the world of Web 3. It's kind of the year that we all dreamt of as crypto people going into it. And so it's just a nice time to sit back and reflect. And so we shall go ahead and get right into those reflections with Ryan Selkis right after a moment to talk about some of these fantastic sponsors that make the show possible. Bankless is proud to be supported by Uniswap. Uniswap is a new paradigm in asset exchange infrastructure. Instead of a cumbersome order book system where trades are matched with other humans, Uniswap is an autonomous piece of software on Ethereum, which is what Ryan and I call a money robot. No human counterparties or centralized intermediaries, just autonomous code on Ethereum. Input the token you want to sell and receive the token you want to buy. Something brand new in the Uniswap ecosystem is the Uniswap Grants program is now accepting applications for grants. We have been saying this for a while and we'll say it again. DAOs have money and they are in need of labor. If you think that you have something to contribute to the Uniswap DAO, apply for a grant to Uniswap. Just look at the size of the Uniswap treasury. It's almost $3 billion. This mountain of capital is looking for labor. Do you have something of value to contribute to the Uniswap DAO? No matter how big or small your idea is, you can apply for a uni grant at unigrants.org and help steer Uniswap in the direction that you think it should go. That's exactly what we did to get Uniswap to be a sponsor for Bankless, and you can do the same for your project. Thank you, Uniswap, for sponsoring Bankless. The era of proof of stake is upon us. Proof of stake systems like Ethereum, Terra, and Solana allow the industry to move away from the hot, loud, and wasteful proof of work systems and return back to a cottage industry of individual stakers and individual validators. And that is what we need to make this industry stay decentralized. Individuals must play their part in crypto network validation. And that is what Lido is here to do. Lido makes staking accessible to everyone at the click of a button. By delegating your stake to Lido's network of nodes, you can access the yield offered by proof-of-stake systems and claim your share of the network transaction rewards. Do you have 32 ETH and want to stake it to Ethereum, but running a node sounds intimidating? Or maybe you have less than 32 ETH and you need to pool your ETH with others so you can access staking yields. Lido offers a solution for both. Simply go to lido.fi, choose which assets you want to stake, and deposit them to the Lido validating network. Lido is working to make sure proof of stake stays as decentralized as possible and is committed to decentralizing its own validating network to eventually become a completely permissionless protocol. So if you want to stake your ETH, Terra, or Sol and get liquidity on your stake, go to lido.fi to get started.
Hey guys, we are back here with Ryan Selkis, the founder of Messari. Ryan has been writing a year-end crypto thesis for as long as I can remember in crypto, at least 4 years, maybe longer. It's become something of a ceremony at this point, something I read every year. I like that it's objective, right? And it's got a lot of the takes that Ryan and the team at Messari have been compiling throughout the year. We pulled out some of those themes. We're going to discuss them today with Ryan. You've seen him on the podcast before. I think last had you on in August. Welcome back, Ryan Selkis.
It's always a pleasure. Excited to be back.
Hey,
you guys
brought
are
us a lot
for punishment.
Yeah, well, you know what? You brought us some material. You brought us a lot. How many pages is this thesis, Ryan? It's like 105.
It's 165, but that's including all of the table of contents and everything. So
yeah,
that's cheating. I don't know. I mean, if this was book form, this is PDF form. So there's a lot of words per page. So this is basically a full book. I didn't do the full word count, but it's hefty.
Yeah, it's definitely hefty. And as a content producer in this space, like color us impressed. There's a lot of work that went into this. And this is a synthesis of, I think, a lot of ideas, a lot of things that went on in 2021. And I think that's maybe where we'll start is sort of, a lot of this is going to be kind of a recap of things and extrapolation moving forward. But let's start with, I guess, the first page of substance in the thesis. And that is this idea of the collapse of institutional trust. That's the title heading. It's got this very compelling graphic. It's like a quadrant-based graphic. And the axes are from ethical to unethical, less competent to competent, and it maps different, I guess, institutions on the score. And you see government, and this is from, I guess, the way the people see these sorts of institutions. Government is, to many people, in the bottom left quadrant of being very incompetent and not very ethical as well.
You don't want to be in that quadrant. That's the bad quadrant.
Yeah, it's the quadrant of pain, quadrant of doom, where you're like incompetent and unethical. Media is there too. We see some other institutions, traditional institutions like NGOs and businesses. Businesses are maybe a little unethical, but the wide perception is that they are also more competent than government. But I think this entire section speaks to the collapse of institutional trust that we've seen. Can you talk a little bit about that trend? Was like 2021 the year that we lost trust in our institutions?
Well, I mean, I think this has been building for a very long time, and I don't think mistrust in government is anything new in the West. If you look at kind of Congress's approval rating for decades now, it's been a slow and steady decline. If you think about kind of trust in media, I'd say the same thing. It's gotten increasingly bifurcated between just extensions of the Democratic and Republican Party, depending on which source you're looking at. So I don't think those are new. I think what is interesting is the fact that NGOs and business are also not included in that upper right quadrant, which is ethical and competent. And one of the things, by the way, I think Andreessen Horowitz's entire presentation that they prepared for policymakers called How to Win the Future, and that is linked to right below this graphic. I think it's a terrific plain English explanation for someone that's trying to grapple with the challenges of crypto and think about the potential that it has for good and moving some of these institutions both into the competent and ethical spectrum. I think it really comes down to incentive alignment between users, employees, owners, and basically all the stakeholders within an organization, regardless of how it's structured. And then ultimately, if you can encode values into those businesses or protocols, then you can actually have something that's viewed as ethical as well. So both effective, efficient, and kind of incentive aligned, I think is an important thing that crypto brings to the table. And we're starting to see that, in terms of first with money, right? You remove money from the government because they're the least competent and least ethical. I think we've seen a lot in decentralized media that's not necessarily crypto related, maybe crypto adjacent, where you've seen a progressive decentralization of media, the rise in podcasts, the rise in Substack and Medium, and of course, Twitter being one of the originals and social media in general, its impact on the mainstream media. I think with DAOs, you're starting to see what we might be able to do with NGOs and bringing public goods into a more competent management structure. That's arguable, of course, because of how nascent the tools are within crypto. And then obviously, business, I would argue, yes, they're competent. I think that the reason that they're viewed maybe as unethical is less about their them being evil and more about incentive misalignment. And that's what I think we get really excited about in terms of how Web3 could fix some of those issues with incentive alignment in terms of the end users and end customers of these businesses. So first off, I'd say hopefully you can read it or at least skim some of the thesis. But I think A16Z, this is kind of required reading for anyone that's going from 0 to 1 on like why Bitcoin, why Web3 period, that has no prior knowledge and is just trying to grapple with the why, not necessarily like all the specifics of how this Wild West is operating.
And for the podcast listeners out there, it's really important to know that there's again four quadrants: ethical to unethical, less competent to competent. The competent and ethical quadrant is empty. There's nothing there, and this is again a perception of the people that took this survey. And the people are saying that they do not see both an ethical and something that is simultaneously both ethical and competent out there. They can't find any institution out there that they view to be both good and actually good at being good. And so Ryan, go ahead.
Yeah, and this was Edelman that ran the survey. This was not an internal A16Z survey. Okay. This is just kind of cited from their presentation. So it is an independent survey that had quite a bit of foolproof kind of stress testing and kind of established survey methodology, not just something that's kind of crypto native.
And you put this is your first big point in a document that hundreds of thousands of people are going to read. So you wanted to put this very, very first, as in letting everyone know that no one really thinks of any other institution out there that can be good and also be good at being good. And then you also added in the second thesis, which I think we want to go to now, saying that crypto and Web3 is inevitable. So is the idea here is that like crypto and Web3 is going to hopefully that they fill the missing niche, fill the missing quadrant of both good and ethical institutions out there. And you elaborated on it a little bit, but can you just keep on going? What about crypto and what about Web3 is really doing a good job, or hopefully aspiring to fill that ethical and competent niche?
I think it's a little bit too early to say that we're going to fill that quadrant when it comes to public perception. But the point of number one is to show that crypto doesn't explode in a vacuum. Right? There is a reason that something like crypto can take off and it has oxygen. So all of the development, all of the institutional capital, that's basically fire and the early kindling. But at the end of the day, it needs oxygen, it needs end users. And I think number one is really about how do you fan the flames once the fire is started, which we've seen kind of over the last 10 years. That infrastructure has been built. The 0 to 1 innovations in Bitcoin, in Ethereum, in DeFi, in non-fungible token ownership and digital assets ownership, and now some other kind of emerging areas like decentralized social media. You have the MVPs, but the only way that those MVPs actually catch fire and become something that can really eat large swaths of the economy or our society in general is if something else is broken out of the incumbent system. I do think it's a good pairing, and I think the reason I'd say that crypto is inevitable at this point, it's really comes down to the fact that there's many different avenues that people can take if they want to participate in crypto. And in some cases, we're getting closer to that state of the world where they might not necessarily know or care that they're actually using crypto as rails, right? The important thing is that we've got aligned end user incentives, and for many of these networks, the end users are also the owners and governors. So that comes with it, financial incentives. There are governance rights and basically a say in how things are managed. And I think that's a pretty transformative 0 to 1 understanding that people are going to like. At some point, everybody talks in crypto about going down the rabbit hole and having the red pill moment, right? When did you get red pilled, or when did you fall down the rabbit hole? And it really is like something that clicks. Sometimes it takes a little while. Sometimes, I don't really understand Bitcoin, or I don't understand ETH because it's kind of turtles all the way down, or I don't, DeFi, there's no real economic activity there. But then someone will look at, an NFT and say, okay, digital art and provenance, I believe that we're spending more of our time online. So I believe that like some provable digital scarcity for a painting or an avatar, that's going to be relatively easy to enforce. And I can see that being important. A Wall Street type might have gone from 0 to 1 on DeFi, right? Because now there's all the stablecoin infrastructure, and I understand yield farming because there's some, favorable economics in terms of lending or in terms of decentralized exchange, kind of market maker earnings, but also because you're early, you're basically getting, effectively equity in some of these emerging protocols. I think for everybody, it's a little bit different. And the fact that there's so many discrete sectors now that have all crossed the chasm, and there's so much institutional capital that's been raised to deploy into the next round of infrastructure, and also to potentially backstop some catastrophic kind of market breakdown that we might see in the next 6 to 12 months. I think it's a good 1-2 combination that might prevent the industry from taking basically years off or years where we're sucking wind. That's not to say that prices won't correct. I think that's overblown. That hey, we're never going to see a bear market again. But there's a difference between a bear market in token prices and a bear market where teams fire 50% of their workforce, right, or 80% of their workforce just because the token prices went down. And when you take that into consideration, you take the 5-year play into consideration, and then you just see the talent that's entering the market day in, day out. It's hard to bet against that, and I think it's unwise to bet against that.
Is this the first time you would say something, you would use that phrase, Ryan? This is the first year that inevitable, right? Because look, some believers would have used this phrase in 2012 and just said, hey, look, Bitcoin is inevitable, right? But I'm wondering if this year was unique from your perspective in crypto's ability to hit escape velocity?
I would say so. So everybody should panic because maybe that's a sign of the market top, and things are going to completely unravel all throughout next year. I would say inevitable, with the one important caveat that crypto's success and medium-term viability depends on some measured proportionate response from Western regulators. And I do go into it later in the report, and I know we'll probably talk about it, but I think as the US goes, so goes crypto in the medium term. I think Bitcoin is kind of in its own completely different universe right now. I think Ethereum is the highest potential asset out there, but it's also still not without risk. And I think that, where I disagree with you guys on kind of the ETH is money stuff, as we've gone over in prior podcasts. I don't view its success as inevitable from a regulatory perspective, just because so much of the activity that rides Ethereum's rails is in the crosshairs throughout the West right now. So in the worst case scenarios, which I think fortunately we're starting to dial back from, but in the worst case scenarios, the layer one networks and all of the applications, I think are those that are most at risk. So the question remains is, have we gotten too big as a community to basically force into non-existence? And I think we're close. I think 2022 will be interesting to see if there is a large sell-off, and we have a bear market on par with 2018. Do we lose all of our user momentum? And then does that kind of turn the tide of public opinion? So, people start clamoring for regulation, or basically don't really care to fight, for crypto. Basically the polar opposite of what we saw this summer, right? So how much of the outcry this summer will persist in a 80% down market? I think that's the one thing that I'm still keeping an eye on.
Last thing before we move from this idea of institutional distrust and crypto kind of occupying this upper right quadrant of ethical and competent, because I think that's a really core thesis. But you also said this, and this is maybe one of your first predictions in the report, and you're talking about inflation. Inflation, the money system, the dollar being an institution in and of itself, right? You said this: things will get worse before they get better in the real world. Inflation will remain above 5% throughout 2022, above 5%. We're at 6.8% now, while late year interest rate hikes stall the stock market's momentum and hurt growth stocks. It's an interesting prediction. This is good for crypto in the short term, but risky in the medium term, as more crypto companies and users get deplatformed and censorship from Western tech and banking platforms accelerates amidst the Biden administration's crypto crackdown. So a few predictions you're starting to make here is that we're going to have persistent inflation, not transitory inflation, persistent inflation next year. That will lead to the Fed raising interest rates, which will lead to some decrease in the stock market momentum. All of this might be good short term for crypto, but then you also see sort of a crypto unfriendly Biden administration executive branch kind of cracking down. Anything you want to say about these predictions before we move on?
I think the only thing that I would note is that we're recording this on December 14th, and keep in mind that this was written, pencils down about a month ago, and it was published a couple of weeks ago now. So this happened, I think it was written at, Bitcoin at 65,000 or so, and then fully polished and edited when we were at 58. So we've already kind of seen a 20% correction, and we've seen a correction in the S&P, and we've seen a bit more fear in the market, along with some of these CPI prints that were way ahead of forecast. So I think some of this is already starting to hold up well, and the question is always, from what height do you fall, or from what floor do you rally? So I think I don't really have a directional sense of where the stock market or where crypto is going, but there are a few different scenarios, and at this point, I would say most of crypto's momentum is going to be tied to the stock market, unless we start to see some really nasty inflation, and there's kind of a breakdown in the narrative of Bitcoin in particular, and to a lesser extent ETH as a risk-on asset, and instead the inflation hedge narrative really does take hold, and people start to flood to Bitcoin and ETH as kind of safe assets.
The last narrative that we want to touch on in this section of the narratives to watch is on page 11, Ryan, where Ryan, you said, Ryan Selkis, you said that this is the cycle where crypto use cases unrelated to Bitcoin were finally validated and achieved meaningful adoption. And for those that came into crypto in 2020 or 2021, this narrative, this take might not land with as much as some of the old timers. Can you just unpack the significance for people that may have come just recently into the industry? Why is use cases unrelated to Bitcoin finally being validated and adopted? Why is that a big deal?
I think it happened to a lesser extent in 2017 as well with the ICO boom. ETH became the reserve currency for all the new tokens that were raising capital, right? All the ERC20s. I think this year it's a little bit different because last year was all about the macro trade. Paul Tudor Jones getting in, Michael Saylor getting in, and kind of corporates and nation states alike, thinking about Bitcoin as a store of value and something that would be a hedge on the fact that 40% of the dollars that have ever been put into existence were printed in the last year and a half. And if you look at the kind of throughput on the Ethereum blockchain and all the demand last summer for DeFi, and then this year for NFTs, and what we're I think starting to see in gaming, it's now not imperative that anyone comes through Bitcoin in order to get their first crypto exposure, right? You could go on OpenSea and not really even understand that you're using ETH. You might just want to buy, digital art, but you're going to create an Ethereum wallet in order to, custody that. And I think that's a pretty big change. Now, the question becomes, and I'm particularly interested to see how Coinbase handles it when they roll out their NFT marketplace. Will the same thing happen with NFTs that happened previously with ERC20 tokens and with DeFi, where ultimately everything gets dollarized, right? Everything ties back to stable coins, and the volatile cryptos are basically abstracted from the process. I think that's probably likely because most normal people are not going to denominate JPEGs in ETH, but we'll see. The important thing is that the use cases that I think have really gotten people excited are not tied to Bitcoin, the asset. Now, you can argue that Bitcoin is going to be bridged to other blockchains, and you'll have like a settlement layer that is the Bitcoin blockchain, but ultimately you'll have Bitcoin equivalence trading on all other sorts of layer one and layer twos. I think that's kind of a coin flip for me, whether that actually takes hold or whether we see a proliferation of a number of other like layer one assets that kind of almost represent the GDP, as I've referred to from some folks, of those native chains. And I think that's, that there's pros and cons to that happening for Ethereum, right? Because, in Ethereum's case, it's got to ward off all these other layer ones. And then you have a question of how much value for Ethereum-based settlement goes to the primary chain versus all the other layer twos that are securing all these other transactions. So there's, I think this is probably the greatest environment that you could imagine for an activist specialist crypto investor, particularly on the kind of liquid side of things, because things are so fluid and there is such incredible information asymmetry. I would imagine, next year is going to be a good time for folks like that. This year was already a great year for that, but I'd say for like the smart fundamental oriented speculator, next year is probably going to be even better. And it's because of this theme where cryptos are decoupling. So everything isn't just moving completely in lockstep.
Yeah. Would you go as far as to say, Ryan, that 2021 kind of marked the death of Bitcoin maximalism? And what I mean by that is there was this idea that was kind of popularized after the 2017 sort of crash, right? Hype crash, ICO mania, craziness, everything sort of died off, that Okay, we're back to Bitcoin. Bitcoin is the only use case of this whole blockchain thing. See, we told you so. And that was very popular sentiment in 2018 and 2019. The purpose of blockchain is Bitcoin. That's kind of it. Now we've seen sort of a resurgence of lots of different use cases. DeFi took on life and NFTs and all of these things. So that old notion of Bitcoin maximalism, Bitcoin as the only use case, is that dead now? Do you think that's dead, gone, and buried, or do you think it's going to come back at some point?
I think any type of maximalism, any type of coin maximalism, those are your incels, right? Anyone that is just a like complete mercenary, that's probably your more promiscuous types. And then you've got folks in between that are just really passionate about like the community that they're in for different reasons. They could, have terrific, fundamentals driven reasons. Those are the nice boys that you want to marry. So like, as long as you don't go like too far down, either side there, I think you want to split the uprates. And look, at the end of the day, these are investments. So I think it would be crazy to think that you're going to have people that are excited about crypto that are not also going to have intrinsic biases based on what they're holding, right? Because what they're holding usually matches where they're spending time. Where they're spending time tends to match the network they're building. So I think that only becomes a problem if you are over levered or kind of over indexed to one particular community, and you're doing so blindly and essentially writing off everything else. I think that's true for Ethereum folks that just think that Bitcoin is going to die. I think that's true for Bitcoin maximalists that it's getting so tired just hearing that everything else is a scam when all the data is just it just flies right in your face. And you can argue, I think, semantics about what constitutes crypto and decentralization, but it doesn't change the fact that there's a spectrum of networks and protocols and their underlying assets that are interesting to people for different reasons. And it's not always about decentralization. It's not always about money. It's not always about speed. Everybody's making different trade-offs, and I think that's true for the alt L1s. That's true for the various layer 2s that are going to connect into Ethereum or interoperate between other chains. And it's arguably even true for like the meme coins, like Doge and Shiba. That's just people going for GameStop into another fun community and kind of playing a lottery-like game where they don't really care about what money is going in or what's happening on the way out. So they're just in it for the lulls. I think I am anti-maximalist in all forms.
So guys, that has been 3 of Ryan's top 10 narratives to watch in 2021 and 2022. There are, I believe, 7 more in this section and also like 6 other sections. We're going to leave this section behind and go into a new section, which is the top people to watch. And interestingly, top 10 people to watch. There's a bunch of familiar names in here. Devin Finzer from OpenSea, Kyle Samani, CMS and Suzu, Jiho from Axie, Paradigm. Lots of familiar names. Also the beloved Hester Purse. But I wanted to touch on number 1, which interestingly you have named the person to watch in 2022 is "We All Gonna Make It," the slogan. And you say, in the past, I've avoided the urge to give everyone a spot on the list. And so I think you're using the "We All Gonna Make It" slogan as like a placeholder for just everyone to watch in 2022. Because you said it feels like a cop-out to just say everyone. It's a sign of a market top. But then you also say that this "We All Gonna Make It" slogan is different than some of the slogans that the crypto community has chanted before. Why is "We All Gonna Make It" something to watch in 2022? What about that slogan do you really, really like?
Well, I like it because it's kind of a nice spin on something that Balaji Srinivasan says that I like and I've kind of co-opted, which is the whole concept of win and help win. And it kind of speaks to the fact that crypto is not zero sum, and most of these applications, I think, will be successful in some form, whether the specific smart contract platform or the specific cross-chain bridge or the specific DEX, is ultimately the winner, is kind of beside the point. I think, as a market, as a sector, there's basically just unlimited upside, right? And the last 18 months kind of felt like that scene in Vegas Vacation where like the sun comes out. It's like the very end of the movie. It's like, I put a quarter in, I want a car, I put a quarter in, I want a car, I put a quarter in, I want, like every single sector is kind of exploded at the same time. And the sequence I think mattered too, because a lot of them were building blocks for the rest. But the thing that I think makes this important to watch as a trend for next year is what happens when things start to go a little sideways, right? Does everyone catch their collective breath? Do we start to see actual, pretty intense wars break out, or vampire attacks at scale, or different, kind of aggressive competitive tactics? We'll see, but we talked about like ETH killers for a long time, and we haven't really seen things get that aggressive. Instead, what you've seen is now Solana's a $60 billion network, and now Polkadot's a $50 billion network, and Terra is a $20 billion network, and Avalanche is a $20 billion network. So, and at the same time, ETH is $500 billion. So do you think that there's going to be a shuffling in market share? Probably. But does that mean that it's all going to be at the expense of Ethereum, right? Or that Ethereum's growth is going to be at the expense of Bitcoin? I don't know if that's the right way to look at it. If anything, I'd say that's probably more true at the application layer level. But even then, it's difficult to imagine that decentralized lending platforms are not going to look like decentralized banks. And I think that's true if for no other reason than there's going to be a new user group that feels left out of the early rewards that the incumbents were able to generate from using a specific decentralized lending protocol. So you'll basically have upstarts that get built out over time, maybe sequentially, or one per year or something like that, until you have some equilibrium over time where there's 10 big decentralized banks, just like there are 10 big global banks. And of course, one will be the largest, and you'll have a pecking order. But I don't think that those are, I don't think it's necessarily fixed. And watching everybody compete next year will look more like the real business world, and less like the knives are out 2018, you're going to die or I'm going to die, so I'm going to stab you type of mentality that I think we kind of lived through in the last bear market.
My version of this trope is, if you want to go fast, go alone, but if you want to go far, go together. And it's basically just saying, hey, we're all better together. And that, I think, is a great segue into our next conversation, which is how China is not coming along with us. China is de-Bitcoinizing. It kicked out all of its Bitcoin hash power, and overall is also following through with kicking out the rest of all crypto financial services. And you're saying that this is one of the big themes of 2021 was what you are calling the great fall of China's Bitcoin industry. Can you just talk about why you think that this is so significant, and what do you think this is going to mean for 2022 and beyond?
I think this is huge on a few different axes. First and foremost, China was never going to embrace crypto. It's become a meme to insiders. China bans Bitcoin for the 300th time. It still gets picked up by the media, but I think most people that understand crypto and have followed the market know that there was never any chance that China was actually going to embrace decentralized protocols and decentralized finance. That includes Bitcoin, Ethereum, everything kind of straight on down. They're building their own in-house digital currency system and blockchain-based system in an attempt to replace the dollar as the world's reserve currency. And I think, honestly, if we keep shooting ourselves in the foot, they're probably going to win, because they're the dominant trading partner with most countries in the world at this point. If they beat the US to issuing a blockchain-based money at scale, and if they're basically able to gate privacy at the border, right? So like everything is surveilled within mainland China, but the yuan is somehow exportable and private internationally. So people get over the concern of the CCP basically surveilling every single transaction that happens, outside of their own Chinese borders. I think it's by far the kind of theme to watch. I think from a macro perspective in 2022. But when it comes to crypto and decentralized currencies and assets, it was one of the greatest de-risking events of the year as well, because it finally kind of put this narrative to bed that, what happens if China bans mining, right? What happens if China seizes all the Bitcoin, within its borders, or shuts down all the speculation domestically? And we saw exactly what happened. There was a 50% sell-off in the couple months from May to June, and of course things got overheated. So this is only one reason I think that the market's corrected so much over the summer, but it did kind of clean the market out of any remaining speculation that China was going to be a meaningful part or kind of meaningful source of demand for crypto. And at the same time, it at once crippled two of the critics' greatest concerns about Bitcoin in particular. And that was, number one, do we really want to be promoting an asset that is dominated by China and ultimately is highly volatile and is going to be at the whims of the CCP if they ever do decide to shut it down? Well, they did shut it down. So we kind of saw what the aftermath looked like. And then two was, is the fact that miners in proof of work systems predominantly sit behind the Great Firewall a systemic threat to Bitcoin and Ethereum, because until the merge, Ethereum is still a proof of work currency, right? So I think again, that security risk was put to bed. And then the 2A there is, or 2B, I guess, all of the critics that kind of came out of the woodwork in like a 2-week span in the spring that were concerned about Bitcoin's ESG narrative and Ethereum's kind of temporary ESG narrative and impact on climate. That was basically completely put to bed, because that the mix of energy that's being used in the West versus mainland China is predominantly clean. And so the mix is not only got cleaner overnight, but it's going to progressively get cleaner for the longer that mining shifts to the Western countries and different jurisdictions that are actually prioritizing clean energy. So I think I mean, I don't really understand the policy choice in general, particularly on why ban mining, but it's we'll see if they double back on it. I think it was one of the most important kind of macro events of the year that's positive for crypto in the US and Europe.
Ryan, can we maybe talk about how that relates to America's opportunity and the US's opportunity here, right? There's got this section, I'll flip to it in a minute, called the American Battleground. Right? And you said this, so we just talked about China, but what is the US's opportunity? And it's almost like an opportunity for the US to lose if it does nothing. And you said this: the US is either going to embrace crypto and win, or ban crypto and disintegrate. Those are the two options: embrace crypto and win, or ban crypto and disintegrate. Let's talk about that. What did you mean by that?
Well, I think we've got some real structural problems in the US, particularly down in DC, and when we talk about federal leadership. But at the end of the day, I think if China doesn't ban Bitcoin mining and we don't see the exodus of that whole kind of subsector to the West, I doubt Ted Cruz, for instance, or any of the American politicians really kind of picked this up as quickly as they did, for two reasons. One, there's a real state level impact that the shift of mining resources from Sichuan and mainland China to Texas, for instance, will have on that state's economy. And two, it's kind of a unifying narrative that whatever China does, we should do the opposite almost. That is maybe the gut reaction from politicians in DC. And I think that was a powerful 1-2 punch. And it doesn't take a lot to get momentum behind different issues, particularly once a politician sees it, it's popular, right? So you combine the timing of the Chinese mining ban with the infrastructure bill over the summer, and all of a sudden this becomes a bipartisan movement that one side of the aisle, the Republicans, picked up on pretty quickly, and it was because they saw how much moderate and left-leaning support they'd be able to get pretty much overnight by being on the right side of the issue. It's kind of a truism. Every single time a politician or some policymaker tweets or speaks favorably about crypto, good things happen in terms of their social media and their kind of public persona. And the reverse is true, right? Those that are on the wrong side are basically completely decimated. Their replies are ruined. They're memed out of existence, or they're basically penalized in the harshest way possible.
They get attacked by the cyber hornets,
at least in terms of like social signaling. Mm-hmm. Yep. So I think the steps and the kind of path to being taken seriously and having this become a really important issue, not only for Republicans, but I think for Democrats now in the last couple of months. I think that puts us in a good position because we can kind of paint this as something that is completely opposite and counter to China's approach, not only to tech, but specifically to financial services and reserve currencies. And I think we'll be in a good place if we just have slightly lighter touch and we don't try to out China when it comes to surveillance and the centralization of tech and tech development, which would be, I think, an unmitigated disaster for anyone that's even anecdotally familiar with how DC operates and how up to speed they are on the tech learning curve.
Well, and so here's the thing, Ryan, is you mentioned in your theses that we do have some monsters in the closet here, right? And, two of them are the FSOC, the Financial Services Oversight Council, with its 10 members, the Fed, CFTC, basic FDIC, OCC, all of our regulators, and then also the SEC dominance here. And so you contrast that FSOC and SEC kind of are the primary, I guess, regulators that are taking a harsh stance on crypto versus the crypto coalition, right? Where we have our own coalition that has started to form. I mean, Messari is doing great work here, but also Coin Center, the Blockchain Association, the Crypto Council for Innovation, the A16Z policy team, the Chamber of Digital Commerce, even public goods like Gitcoin are giving to the cause. I would say the Bankless Nation has played a role in propagating messages and getting that sort of out there. So we've got some of these regulators who want a bit more control over crypto and are pushing back against the agenda that you just laid out versus the crypto coalition. And David has talked about this as like, it's like we got chess pieces on the board, right? We got the black versus the white here. And now the two sides are playing this epic game of crypto chess. Can you talk about those contrast points and who's well positioned going into 2022?
Who's well positioned from a sector or from a which side of the table?
I know who you're betting on, and I know whose team you're on, but like, is the crypto side, are we still the underdogs, or are we actually, able to marshal some strength against this opposing coalition that is formed against us?
Yeah, so I won't take for granted that all your listeners are going to read the report and then listen to this as kind of a follow-up. So I'll try to quickly go through who the players are, and I think you did a good job as a starting point. But the only thing I would add is like who's actually taking the ball here, right? So historically, out of FSOC, which is very important structurally, that basically they're responsible for maintaining the stability of the financial system and averting another 2008 like financial crisis, right? FSOC was created as kind of a supra regulatory agency that was going to align all those members that you just mentioned and try to identify systemically important institutions with the passage of Dodd-Frank. So this is what they do is not trivial, and if they identify something as systemically important and basically worthy of cross-agency coordination, then it gets addressed, and they have kind of sweeping mandate to take on those challenges. Now we had I'd say an across-the-board downgrade in leadership across FSOC in the transition of the Biden administration. Brian Brooks, who is the former head of the OCC, he was chief legal officer at Coinbase, and then he went to Binance US. Now he's at Bitfury, and just was I think a rock star in his testimony last week, even when some of the crypto executives took the Hill, and it was probably the friendliest hearing that I think we've seen to date in the House. But he's obviously no longer there. We almost had a replacement that was an avowed communist, and fortunately, crypto and Wall Street were able to agree that Amarova, who was the woman who was up for nomination, was just completely unpalatable and kind of unworkable as a regulatory head for the economy that commands the largest financial system in the world. So crisis narrowly averted. Crisis narrowly averted with Jerome Powell getting reappointed instead of someone like Brainerd at the Fed, who's much more critical and I think cynical about Bitcoin and crypto and its position in the financial system. And then you've got other agencies like the FDIC, who's traditionally been favorable, and then CFTC, who's been traditionally favorable with crypto. So that kind of leaves two that are most important, and there's a handful of others like insurance agencies and like federal housing and stuff. So they're not really as relevant to crypto, but the other two that are relevant are Treasury and SEC. And in the Treasury, it's important for people to remember that during this infrastructure bill, it was Janet Yellen who explicitly pushed back on the amendments that were proposed by the crypto industry, right? So there was this bipartisan coalition of senators that got together and said, we need to clarify this broker language. And we know what the intention is, or we think we know what the intention is. This is supposed to apply to groups like Coinbase, for instance. And I don't think there's any debate there. They've even applied for broker-dealer licenses. They look and feel and act like that. So of course, this makes sense. And Treasury pushed back on the exclusion of DeFi and individuals and kind of the modifications to the language. And of course, that's now law of the land. So you understand that they do want a broad brush and sweeping authority and flexibility on their end to regulate things like DeFi and stable coins and everything that isn't necessarily just trading on Coinbase or Kraken, right? So that's number one. Now, the issue is that the person that Treasury is also delegating to the most is the SEC, and Chair Gensler is, of course, openly hostile to the entire crypto industry. And I've obviously, had many different things to say about Chair Gensler, but it's strategic, and I think there's a reason for it. I think he's an enemy to the industry. I think he's on the wrong side of the issue, and I think he's been dishonest and he's acted in bad faith pretty much at every step along the way. And what's most concerning is he knows better, because he does understand how crypto works. He did teach about it at MIT. He knows how Washington works, because this is not his first rodeo as a regulator. If you think about him as a political animal that's essentially doing whatever he can to continue to advance his career, it gets even worse, because that Janet Yellen was on the side of keeping the broker language as written in the broker debate over the summer and the infrastructure bill debate over the summer. And that Elizabeth Warren, who's arguably the most powerful Democrat that's anti-crypto right now, is basically coordinating with him, and they're giving each other alley-oops during different hearings in terms of how crypto should be regulated and what authority the SEC should have over the token economy. So that's where the attention is now. Now, that sounds really negative, but there is kind of one silver lining here. And this is not really a red or blue thing, but I think Biden's approval rating being where it is has been maybe one of the primary reasons that things are starting to get a little bit better and the rhetoric is starting to get dialed back. If you look just kind of month over month or quarter over quarter, the difference in rhetoric on the left versus like what we saw last week in the House Financial Services hearing, which was probably the best hearing that I think the industry has ever had, and the most thoughtful and kind of engaging with, Brad Sherman aside, who's always been a clown. But I don't think that happens if the Democrats don't watch what just happened with a couple of governor races, and they aren't petrified of what I think is going to be a catastrophic series of losses in midterms. Why would you continue to go on the offensive to an entire community of young, and I think majority progressive builders that constitute crypto, right? We always talk about crypto being pre-political or bipartisan or whatever. And one way to turn that against you is to attack a bunch of progressive leaning voters and builders and call them things like tax evaders and sympathizers with terrorists and shadowy supercoders and all that. That's politically red pilling people at scale is a pretty dangerous game. And so I think the politicians, between the kickback over the summer and then kind of the declining poll ratings and kind of what they've seen in terms of pushback to some of the more liberal potential appointees, all of that seems like the worst might be over in general. Now it's just about this kind of targeted issue that we have with Chair Gensler at the SEC. That was long-winded, but I think it's, there's a lot to unpack there and a lot to understand.
So that's like that side of things, right? But are you seeing as well the crypto side getting stronger in the face of this as well? Like, are crypto's political forces, lobbying, organizational forces strengthening? How would you evaluate that so far?
Yeah, I think they're definitely strengthening. I mean, there's a heck of a lot more money going into it. I know for a while, CCI, the Crypto Council, which is one of the newer trade associations, it was basically just the corporates and the entities that were backing it. It didn't actually have a staff, right? I believe that's changed only very recently in terms of having some leadership in place. The Blockchain Association was a handful of people at the beginning of the year, right? They're adding headcount, and obviously they've added a number of new members. Coin Center is, I have to imagine, is at a record year in terms of donations. And every single major crypto company is starting to think seriously about policy and how they're engaging and what role they're playing, either with the trade associations or kind of direct engagement. And I also think you are going to start to see more super PACs and PACs formed that get more active in electoral politics, right? So there's a lot of lobbying money that's coming in off the sidelines because people are finally awake to it. So that, almost the best case scenario that I think could happen is like the summer scared everybody. A ton of money is now going into this, but tensions are getting dialed back at least a little bit. So we've got this narrow window where I think we can make some real progress over the course of the next couple of years. But remember, DC does not move in crypto at crypto speed, right? So this is going to play out from now through 2030, really, but certainly through the end of Biden's first term. And it doesn't really matter what happens in the midterms. I think even if Republicans take control of the House and Senate, you still have the leadership in place that you have at the SEC and Treasury potentially. So there's a lot that's going to be that's going to have to play out on kind of legal side in terms of court challenges, on the electoral side in terms of getting pro crypto candidates through primaries and actually into Congress, so that you have more knowledgeable people that can even think about crafting sane policy. And then, of course, court of public opinion, which is really the only way that you're going to see any type of movement on the regulatory side, because they're unelected positions, they're appointed, and the person that appoints them is still got 3 years in his term.
I think we are going to see a lot of progress on this front in 2022. I think the battle in Capitol Hill is only getting started. Ryan, there's a number of other topics that we want to get into, such as NFTs. NFTs had a blow up year in 2021. Also, Ethereum's Q3 earnings report, and also layer one, alternative layer one relative valuations, as well as the Solana Summer. And then, Ryan, you have said that the Bankless boys were right for the wrong reasons when it came to Ether. So we definitely want to unpack that as well. But first, before we get to all those conversations, we want to take a moment to talk about some of these fantastic sponsors that make the show possible. Gemini is the world's most trusted cryptocurrency exchange. I've been a customer of Gemini since I first got into crypto in 2017, and it's been my main exchange of choice to make my crypto buys and sells. Gemini is available in all 50 states and in over 50 countries worldwide, and on Gemini there are markets for over 30 various different crypto assets, including many of the hot DeFi tokens, and it's one of the few exchanges that has liquid DAI markets. Gemini just launched their Earn program, where you can earn up to 7.4% interest on 26 various crypto assets. If you're tired of paying fees in DeFi, or you don't want to worry about DeFi exploits, but you still want to earn interest on your crypto assets, Gemini Earn is the product for you. Another product I'm stoked to get my hands on is the Gemini Crypto Back Credit Card, which gives you 3% cash back on all of your purchases, but paid to you in your preferred crypto asset. When I get my Gemini credit card, I'm going to make sure that I get my cash back in ETH. So whenever I buy something, I get a little bit of ETH bonus back to me at the same time. You can open up a free account in under 3 minutes at gemini.com/gobankless. And if you trade more than $100 within the first 30 days after sign up, you'll be gifted a free $15 Bitcoin bonus. Check them out at gemini.com/gobankless. The Aave protocol is a decentralized liquidity protocol on Ethereum, which allows users to supply and borrow certain crypto assets. Aave version 2 has a ton of cool features that makes using the Aave protocol even more powerful. With Aave, you can leverage the full power of DeFi money Legos, yield, and composability all in one application. On Aave, there are a ton of assets that you can supply to the protocol in order to gain yield, and all of those same assets can also be borrowed from the protocol if you have supplied collateral. Here you can see me borrowing 200 USDC against my portfolio of a number of different DeFi tokens in ETH. I'll choose a variable interest rate because it's a lower rate than the stable interest rate option, but I could choose the stable interest rate option if I wanted to lock in that interest rate in permanently. V2 also features the ability for users to swap collateral without having to withdraw their assets, trade them on Uniswap, and then deposit them back into Aave. With Aave, users can do this in one seamless transaction, saving you time and gas costs. Check out the power of Aave at aave.com. That's AAVE.com.
Hey guys, we are back with Ryan Selkis going through the crypto theses for 2022. We gotta start here, okay? So as we come back, let's talk about NFTs. NFTs had an absolutely blowout year. I feel like it was almost maybe the year of NFTs, and I'm wondering if you would go so far as to say this, but this is your entire section on NFTs and Web3 plumbing. It's got things like a $69 million Mona Lisa JPEG,
That's
which
the
sold.
Beeple.
I remember that as the Beeple thing. NFTs as defining them. PFPs, that whole thing. Punks versus apes, those went mainstream. We have fan tokens. We have this loot phenomenon, a bottom-up game. Axie Infinity had this crazy amazing year where they went from 30 million market cap to $8 billion market cap. That doesn't happen anywhere else except crypto. We saw the financialization of NFTs. OpenSea absolutely crushing it in real numbers, like revenue. This is an incredible year for OpenSea. The cryptoverse, metaverse became a phrase that jumped into popular vernacular. Facebook even changed their whole name to Meta partially as a result of this. Non-fungible credentials, you talk about namespaces, the .eth and ENS went... did sort of a token drop as well. There's so much more we can talk about with respect to NFTs, and your theses do that. So can I ask you this question? Is it fair to call 2021 the year of NFTs? Were they the big breakout use case for crypto in your mind?
Certainly one of two. Yeah, I think I would argue that it was the year of NFTs. It's tough to overlook layer ones outside of Ethereum and kind of how much demand there was for block space, period. But NFTs were one of the largest drivers of that for sure. So I think that's right. And for me, it was always difficult thinking about how NFTs would cross the chasm. I was definitely surprised by how fast and furious that the rally was, and how fast they came into vogue this year. Because if you think about it, people, I think in the mainstream, associate NFTs with images now. But NFTs, the original NFTs, or some of the ones that we thought might be most interesting, were things like tokenized securities. If you think about Harbor, if some of your listeners might remember, like David Sachs' company, Harbor, that was tokenizing securities and ultimately putting real estate on public blockchains, right? And they've kind of created a standard around that. It was based on
There was a whole
NFT
idea,
standard.
Ryan, like where you'd basically tokenize all of these houses and all of this real estate, and then you could go long certain neighborhoods in San Francisco and short other neighborhoods. This was a very popular concept in 2017.
And it's an amazing idea, and I think we will get there, but I think we'll get there last, right? So I think I was under the impression, and I think I definitely appreciated and thought that things like images and digital art would probably be the toys that got adoption first. But the rip your face off rally and how fast that happened, I think definitely took me by surprise, and it basically paved the way for a number of other innovative projects. The mental model that I have going forward with NFTs, and why I think this is somewhat sustainable, and importantly, why that sustainability will lead to the build out of the infrastructure layer, is because I have the benefit of going back to 2013, which was when I first got into Bitcoin, and experiencing that first kind of vertical run up. At its height, Bitcoin got to about $10 billion in market cap. So about 1/1000th of digital gold, of physical gold. Digital gold got to 1/10 of 1%. And in this NFT run up, I'd say it's equally crazy and equally unsustainable. And most of these things are going to correct viciously, probably down to zero, because there's not going to be a bid for digital images that aren't seen as scarce or anyway valuable. What's interesting is the height that they hit was about 1/10 of 1% of the art market, right? So it kind of parallels Bitcoin in that way, right? Bitcoin was gold versus digital gold. Now we're talking about art versus digital art as the first NFT use case. Even if things correct, you could have a 100x increase in market cap just for that sliver of the NFT market. And so knowing that, I think it paves the way for all types of interesting developments and all types of experiments that are actually going to stick. And one of the easiest ways that you can imagine some of these things sticking is by using NFTs as a digital avatar, basically a digital proof of reputation, right? So digital art and visual interpretations of NFTs, I think were the toy that we needed to get into something that's much more interesting, which I'd say is like community-oriented NFTs. This could be things like punks and apes that represent your full self, or more likely, they could be virtual badges that you start earning and become modular parts of your digital identity over time. So, an NFT would be one packet or one credential that you have, or one set of your data IP, and your wallet would be like your kind of universal identifier. So where NFTs go from here, I think the sky is the limit, but importantly, you have the wallet infrastructure. You have now conditioned people to think about the visual nature of NFTs and process rarity just by looking at things, right? So you can basically take a resume or take a set of experiences in the completely pseudonymous world, and you can visualize that using something like an avatar with a gold chain, or if my South Park avatar with the chalice starts shimmering because I've been around for a while and I'm considered a hashtag influencer, right? That's real, and you're going to be able to actually visually process that even in the digital realm. So I think the amount of innovation that's going to unlock is tremendous, and because it will unlock so much value, you'll have more infrastructure that's built. You'll have all the services that help with things like the illiquidity of NFTs, or how do you price them, or how do they actually become composable across different services or different blockchains. I think all that gets solved because of the potential market size. And then 10 years in the future, you will see NFTs that represent real estate. But you're probably going to see NFTs for digital real estate first and all the services that go around those.
The metaverse always comes first, doesn't it? And part of Ethereum's big story is the rise of NFTs. So much of Ethereum's just activity was NFT denominated. And that brings us to what we want to talk to next, which is Ethereum's Q3 earnings report, which is...
Does this look familiar?
This does look familiar. This does look familiar. Yeah. So you started off this section saying, I loved Bankless's Q3 update on Ethereum. Shout out to Ben, the author who wrote it. And you say it's so freaking cool that we can produce earning reports for any crypto community without the need for any central corporate investor relations team. And we can do it over any arbitrary time period and update it in real time. We're talking about a 1000x improvement in investor information symmetry here. And then you also end with this rhetorical question. How would you value a company with this growth profile? And we've got the growth profile for Q3 Ethereum on screen. Just network revenue up 511%, value settled up 400%, Ether issuance down 30% since EIP 1559, active addresses up 24%, DeFi TVL up 1,200%, DEX volume up 300%, stablecoin issued up 400%. And then I could go on. OpenSea sales just absolutely broke the metric, clocking in at 141,000%, basically going from zero to where it is. And so, Ryan, I'm going to ask you two things. Can you just elaborate on just what you said about the 1000x improvement in investor information asymmetry here? And then I'm going to ask you, can you answer your own rhetorical question, which is, how do you value a company with this growth profile?
So I'll answer them in the order you asked. I think what's interesting is this is not just about Ethereum. We actually produced a report like this for Compound as well, and are starting to work with more communities on basically completely decentralized quarterly reporting and financial reporting. And what's important about this is we don't need permission to do it, but we are prioritizing which communities we work with based on which communities are going to value this type of information symmetry, right? So you're basically a competitive bidder in like an open economy where we're essentially serving as Messari as like one of the big four accounting firms almost. And you don't need any cooperation from the community. Now, if you have key influencers or key developers that are going to sanity check your work and answer questions, like that's great. We want to be able to coordinate that. But the fact that we can do this all ourselves and be the primary author, not just the auditor of the primary author's claims, is something that's fundamentally different about crypto. And I think something that we need to highlight much more of in the new year, us as a company, because it's a valuable service for Messari, but I think also just in general, when we're talking to policymakers and trying to educate the masses.
Yeah,
because
by the way,
you can't do this in private markets.
You can't. This is the definition of investor protection, right? It's like crypto provides investor protection. How? Transparency. Anyone can audit this shit. Anyone can find out like the financial statements of any protocol out there, right? It's not siphoned off in silos, like wrapped in closed doors. Only executives know. This is investor protection. Gary Gensler, if you're listening, this is how we do it around here, okay?
And then, Ryan, let's go with the rhetorical question. How do you value a company with this kind of growth profile?
Highly. And that's why Ethereum is a $500 billion asset. But here's the thing. This is not happening in a vacuum, right? And so this is, I think, the big question of this year, of next year, where is value ultimately going to get captured in smart contract or kind of virtual machine platforms? Is it going to be at the layer one? Is it going to be a combination of the layer one and layer two? Ultimately, is everything going to tie back to like the bare minimum that you're willing to spend on security, and then you're going to settle on one or two what would be considered like the most secured chains? I think it's too early to tell exactly how much value is going to get siphoned off, or like what the real long-term multiple should be, right? So you look at some of the metrics for Ethereum, and the value that's settled might continue to skyrocket. But if those are happening in like, if you have massive settlements that are like layer two to layer one, and they're happening, in single blocks, I'm not convinced that the transaction fee there needs to be more than, a basis point or a couple of basis points. And that's great if you're comparing it to the legacy. So you capture, what's the equilibrium going to be, right? Where the miners and the stakers are properly incentivized and the security, spend is high enough that the system works, whether it's Ethereum or some subchain. And I think the growth in transactions might skyrocket. The fees might continue to compress, both due to competition and more available resources. I haven't really seen anyone do a good job of thinking about like what the scalable lower bound is on fees, because everybody is I think getting a little fat and happy right now on inflated fees that we know are not going to persist forever, right? Because their life will find a way, and people will find a way to route to lower cost alternatives. So I think, look, I'm a buyer and a holder of Ethereum at these levels, and continue to be bullish on Ether and some of the other layer ones. The question for me is really, it's really always one of dominance, right? So Bitcoin dominance versus layer ones, and then Ether dominance versus other layer ones. I certainly have not written off any of the other competitive chains, because I think different users are going to make different trade-offs. And I can tell you, as an entrepreneur and someone that's like signing off on expensive Ethereum transactions, something like Solana, you can actually test a product on, right? Like we can't even really economically test new products on Ethereum right now, given where things are. That will change. I know that some of those throughput constraints are temporary, but I think any discussion about valuation, it's a multi-dimensional matrix that you're dealing with on a relative valuation and a kind of fundamental valuation standpoint.
So let's talk about that, because you have a section in your report around relative valuations of other layer ones, right? And so if there were, as you said earlier, maybe two big breakouts for 2021, the first is NFTs, as you said. The second is block space. People buy in block space. We had Chris Dixon on the podcast not too long ago. He said, I'm in the market for block space. I'm a net buyer, bullish on block space. Okay. And so we saw you've got this section about Solana Summer, and then you get into Polkadot. You talk about that a little bit, and Cosmos and Terra with Luna, and all of these alternative layer ones. And there's really, I think, this question that we're almost ending 2021 with, that's kind of a question mark. It's like a TBD, right? So bullish block space, but what does the future world look like? Does it look like a multi-chain layer one world where you have all of these different layer ones? And I think you called this a little bit maybe the technology platform argument, right? So in the same way, we have like a Microsoft, we have Linux, we have a bunch of big, not Linux, but we have like Google's, we have a bunch of big FANG tech companies, right? That's one way of looking at it, versus maybe a sound money argument, which basically says, hey, there's some network effect power law rules, and sound money is the basic asset valuation of these things, and the asset valuation forms the economic security, and there's going to be big power law winners. And so you might have some big dominant layer ones, and then a smaller tail of smaller alternative layer ones, if you will. What's your take on this? Because this is very much the big question of 2022. And I think Bankless listeners will kind of know the Bankless take already. But what's your take that you provide in the thesis, Ryan?
I think about it in terms of operating systems, and Ryan Watkins and our team, I think, laid this out pretty nicely, that there aren't very frequently 3 or 4 or 5 or half dozen winning operating systems. It's usually a couple, right? And there are economies of scale, just in terms of like developing new ecosystems and new kind of full tech stacks, that I think it's tough to fragment across like 3 or 4 or 5 different standards. Now you don't want one, because then everything's very fragile. So maybe it's 2 or 3. And the question becomes, I think, not whether Ethereum is going to win, but whether like basically who else is going to be important out of the other layer ones, and then will those ultimately become the iOS or Android to the others, whichever, right? So I don't know if Ethereum is iOS right now, or Solana's Android or something like that. But I think over time there will be a couple of those standards. It's probably premature to call the race just yet, and Ethereum is not without its risks right now. I think it has a massive head start, but as other ecosystems begin to catch up because they're making different trade-offs, that's when we'll kind of start to understand where things will settle long term and which ecosystems have the strongest staying power. I tend to think that the EVM is going to be one of the operating systems because so much has just already been built there. It would take something massively negative to displace Ethereum, and the EVM in particular is one of the standards.
So Ryan, we want to close out this conversation with our age-old spat of Ether. And you gave us a shout out in your top 10 people to watch as an honorable mention, saying special shout out is in order to the Bankless duo, Ryan and David. So thank you for that. Who have been right about ETH, but we do not make the cut because you think that we have been right for the wrong reasons. What are those reasons, Ryan? What reasons are we wrong about?
At this point, I think it's kind of a semantic argument, and the ETH is money meme and the ultrasound money meme. I think look, you guys have been on the mark, and I'm glad that in December of last year I reversed some of my Zcash thesis and kind of redeployed it into Ethereum. I still am long Zcash and think it's just a massively important project. But it was pretty clear, towards the end of last year that this was going to be a big year for Ethereum, and I underestimated how big it was going to be for some of the other layer ones. I should have indiscriminately bought all of them, but right now, I at the end of last year I was bullish on Luna, Terra, and Ethereum, and so that certainly has played out. But I think the Ethereum community in general could learn something from Suzu's rant about I've abandoned Ethereum. And I know this was like the big story like a couple of weeks ago, and everyone was going back and forth, and
It
was
still
Twitter,
feels like the
so
big story, doesn't it?
I don't know. You guys hold a grudge, so I think he's right. I think it's important that people don't get satisfied when they're in build mode, and recognize that when something is structurally broken, speed to fix is not something that should be taken lightly or not treated seriously. And that's not to say that the Ethereum developers and all the folks that are spending so much time on the merge and layer 2 scaling and interoperability of these different shards, like that they're not like working fast enough or trying hard enough. But I do think it is something that should keep people humble and questioning assumptions, because he is right in the sense that new people do not give a fuck about decentralization by and large, right? Like the religious zealots, the libertarian crowd, the anarchist, like the world is going to end crowd, like we've been in for 10 years, locked into this because it makes a lot of sense and it kind of fits our worldview and thesis. The people that are coming in for NFTs, the people that are going to play in the metaverse, and the people that are going to want this as an alternative to financial services for whatever reason, they're underbanked or think that they can get a better deal, they do not care about the back end. So if they see the headline fees and they're too high, they're going to go elsewhere. And I think that's a problem, right? I think you want sustainability in both directions, and you want a secure system that is going to operate in that upper right quadrant.
Ryan, at risk of being considered a religious zealot, do you know what I have to say to people that don't care about decentralization? There we go. Wait, did that just come through on the Zoom? Good. Okay, cool.
I actually think so. This is a whole nother podcast we could have, and we probably should have in the future, Ryan, about sort of Ethereum's path forward. But one thing I think to look for, to see if, to validate the Bankless thesis in 2022, is this whole idea around modular blockchains and what we call ultra scalable Ethereum. So this year is maybe the year people figured out that ETH is ultra sound money, okay, as a meme again, right? So like not unpacking all that means. I don't think we've seen the last word from Ethereum on scalability. In fact, I think Ethereum is taking the patient approach, but also the right approach with its modular design and layer 2s coming on board. So we'll see. I feel like we're kind of somewhat between like Empire Strikes Back and Return of the Jedi. All right. So like, we'll see. And then maybe we'll talk and evaluate this in another year. And then maybe we make your top 10 list next year of people to watch if we're right about ultra scalable Ethereum and our thesis around layer 2s, or maybe not. This industry always surprises, and there's definitely a lot to learn. What I will say, Ryan, is we definitely appreciate you guys being in the space. I think Messari is just a voice of reason, a voice of truth leadership in an industry with so much bag bias. I think you guys do a great job staying neutral and just, reporting things and analyzing things with a lot of integrity. So we definitely appreciate it. And thank you for putting this thesis together once again. It's great to have you on Bankless, Ryan.
Thank you guys for having me. And I guess if I'm going to see you before a year, it's probably going to be for the flippening episode, where I imagine I'm going to have to rent a dunk tank for right behind me. Just on the off chance, the 20% chance that you guys are right, but I'm not banking on it. So.
I will personally fly out to throw the balls at the dunk tank.
Yeah, and make sure Udi's there too, and a few others, I think. Anyway, guys, crypto is always fun, of course. And Ryan, thank you for joining us. We hope you learned a bit about the thesis today. Action item for you today is download Ryan's crypto thesis for 2022. We'll include a link in the show notes. You can find that at messari.io/crypto-thesis-for-2022. If that sounds too complicated, just click the link in the show notes. Risks and disclaimers, guys. Of course, crypto is risky. Bitcoin is risky. ETH is risky. We legitimately don't know what's going to happen in 2022. Okay. This is our best guess, but we don't know. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the